Not financial advice, simply my journey in margin. Hey everyone, welcome back to Leveraged Life, episode 12. This was a genuinely wild week in the markets, a full week of account activity to walk through, and I want to have an honest conversation about leveraged funds because I think the channel name might be creating some confusion I should clear up. Let's get into it. Markets had a rough week. Thursday was the real story, the worst single day in a month. Alphabet dropped 7% and Tesla dropped 14% on their earnings reports, and between the two of them, the Magnificent Seven shed almost $800 billion in value in a single session. On top of that, oil spiked. Brent crude actually touched $102 a barrel at one point, the highest since May, as fighting escalated in the Middle East. Friday brought some relief. Apple jumped 3.5%, oil pulled back about 4%, and the Dow and S&P both closed higher. But it wasn't enough to erase the week. When you add it all up, the S&P was down 0.6%, the Nasdaq was down 2.1%, and the Dow was down 0.4%, its third straight losing week. Now here's what happened in the account. $2,175 deployed this week, and it's a long list. ZWP, ZDV, XDIV, VDY, CDZ, UTES, INTY, HYLD, PAYG, USCC, EQCL, CLSA, ZLB, ZEQT, and two brand new tickers I'll come back to in a minute, QQCC and EQCC. Distributions came in at $56.44 across 8 different positions. And I also opened a second options trade this week, sold a cash-secured put on SoFi, a July 31st $15.50 strike, collecting $31 in premium. That means I've now got 2 puts, NOK and SoFi, both expiring the same day, July 31st. I'll be honest with you, both are currently sitting at an unrealized loss. NOK is down $77 right now, and SoFi is down $11.50. Real stakes, and right now, this particular experiment isn't working out just yet. But the wheel is going to be the plan if we get assigned. We'll see how it resolves. Okay, I want to spend some real time on this because I think it's actually really important. The channel is called Leveraged Life, and I think that name might be giving people the wrong idea. The leverage in the name refers to the margin account itself, borrowing money through Wealthsimple to invest more than I could with just my own capital. That's the core of what this channel documents. What it does not mean is that I'm out here specifically hunting for leveraged funds, ETFs that have their own built-in leverage on top of whatever I'm doing with margin. But here's the thing. When I actually went through my full list of holdings, I found that 24 of my 38 positions, that's about 2/3, carry embedded leverage inside the fund itself. Some of it's modest, 25% on most of the Hamilton and Harvest and Evolve names. So here's the honest math. That means I've actually got 2 layers of leverage stacked on top of each other. My own margin borrowing, which is sitting at 34% utilization right now, and then fund-level leverage on top of that on nearly 2/3 of what I own. That's higher effective leverage than I think most people, including me if I'm honest, would have guessed just from looking at the account. So this week, I started doing something about it. 2 of my buys this week were QQCC and EQCC. Those are the plain, non-leveraged versions of funds I already own. EQCC sits right next to my existing EQCL position. Same strategy, same issuer, just without the 25% leverage stacked on top. Same idea with QQCC versus QQCL. The plan going forward is to keep some leveraged fund exposure. I'm not getting rid of all of it, but tighten up and lean more toward the regular, non-leveraged versions of the funds I already like. You'll see that show up in the buys over the coming weeks. Quick numbers check. Margin utilization ticked up to 34% this week, still comfortably under my 50% ceiling, but moving the wrong direction if the actual goal is coasting. The payoff tracker is honestly showing we're about $4,000 behind where the model expected at this point because deployment kept going instead of pausing. Current yield on the account is just over 10%, still a wide cushion above the 3.95% margin rate. And for what it's worth, despite the rough market week, the account's actual all-time return is a real live 1.88% gain. So the income engine is doing its job even when the broader market isn't cooperating. That's the week. A rough market, a lot of activity, 2 options trades currently underwater, and an honest look at how much leverage is actually stacked inside this account. Full breakdown and the live tracker are linked below and at leveragelife.ca. See you next week. Not financial advice, simply my journey in margin. Thanks to all for watching. I truly appreciate it. All my links are in the bio.